Good morning, all. Camelback Trading 2724 coming to you this Friday morning, June 12th. We're looking at the SPY ETF market profile here on Window Trader. And a couple things to talk about before we get started. First off, we said prior to yesterday it would be healthy, right? The daily needed some poor structure repaired. Well, that was certainly repaired. However, it was repaired with more poor structure now to the upside. Definitely think it was healthy to pull back. We need some two-sided trade prior to attempting new highs. Just not thrilled the way they went about it. But we can't get always what we want. So number two, generally after a day like yesterday, you get consolidation the following day. And that's exactly what we're getting, right? We one time frame down, all 13 time frames, the whole day, huge gap. Went out with a price probe, which right now is being firmly rejected with just over an hour to go prior to the opening. Downside price probes have a horrible track record. We're right in the middle of value, right in the middle of balance, where there were plenty of sellers yesterday. We'll see if they show up. Was that longer-term selling yesterday? Well, we did 210 million. That's pretty good. We never saw the gap. We one time frame down the whole day. I'm sure there was some, no doubt, longer-term sellers coming in. However, if this is longer-term selling coming in, this market then should continue, even if we consolidate for a day, roll over and continue down. If not, we're going to get some sideways trade, get some balance, and then see if we start getting that slow tick, tick, tick to the upside again. So let's go over destinations and a game plan for this morning. So right now, I'm going to give you everything. Well, the price probe is down at 300.25, almost $6 lower than where we're trading. That looks like it's going to be rejected. Then we had four sets of single prints, 302.91 to 99. Right now, that's getting filled. Then we have the price spike at 303.75. That right now is being rejected. Single prints, 306.71 to 307.16. So that would be a real good first upside destination right now. Then the third set, 308.03 gets filled at 36 cents. And then the fourth set, 309.57 gets filled at 310.01. And then yesterday's high of 312.15, and then that huge gap at 318.22, a 607-point gap. Pre-market high right now is 307.60. Now, if a trend day is to be taken back, it's usually late in the second day or the third day. So we'll see if the bulls are able to take it back. For the downside, first destination right now is my pre-market low of 304.43. And then we don't have anything to yesterday's low of 300.01. And then I gave you a bunch of downside destinations yesterday. I'll give you just two more, 299.47 daily low and 299.45 afternoon pullback low. So game plan for this morning. Well, in balance, in value, in a lot of visual areas where there was sellers yesterday. Do I expect the entire trend day to be taken back right away in the first time frame or so? I do not. So if you are to get a rally, again, we're trading at 306 right now. My next set of single prints start at 306.71. If you are to get a rally up to around that area, you want to take a put play, I have no problem doing that. It's going to decide on what kind of heat you want to take. Do you get out if they get filled at 307.16? That's fine. Then you have another one up at 308 level. Again, you can try different put plays as we go up against the single prints. Things will definitely change if you start one-time framing up, however. That would change my tune totally if we one-time frame up into single prints. Okay? However, if you hold at least one or two sets of single prints and then you one-time frame down, then it's even more of a reason I would stay with a put play. Even though there were sellers all over the place here yesterday, just firmly keep in mind in value, in balance, right? It's horrible risk reward, but there are things to lean on. I would not expect this entire day to be taken back. If it is all taken back and we get into the gap, then for sure it was only just long liquidation. Remember, for the past 2 weeks, we went straight up on basically nothing. So yes, the volume was heavy yesterday, but maybe that's all that was. Maybe it was just all those buyers that were weak longs getting out on top of some new some new shorts piling on. It really does remain to be seen. We're not going to know in one day. But that's a game plan as far as taking some shorts. Do I want to be long right now? I do not. The way you have something to lean on to take shorts, because you know you're outs at the single prints, there's nothing to lean on right now to be a buyer. Not until we get more market-generated information. So I would wait on that. Again, if you're in the trading room, you're going to be getting up-to-the-date trade ideas as the market's about to open and as we trade throughout the trading day. Remember, as I go to the charts, we have the webinar tomorrow, 10 a.m., be a great source of education on how the week evolved, what happened, what did happen, what didn't happen, what we're looking for going forward. Okay, charts. Right now, we're only 11 days into the month. We're one time framing up. 2 months, we'd certainly like to end the end of this month above 313.84. They have plenty of time to do that. As long as they're one time framing up, the week monthly is still healthy. This is the important one, right? Weekly. Yes, we stopped the one-time framing up. Put it into balance. Is it healthy? Maybe it is. We were getting distance, which is good, but maybe we were getting too stretched out. Maybe there wasn't going to be enough energy by the bulls to attack this gap, and they needed to pull back. I don't have a problem with that. I will have a problem, however, if we close below last week's low of 303.06. I think that's important. And I'll have even a bigger problem if we close below 302.50 or 60, because then you're accepted back into this huge balance again, right? So if we're able to close above those two levels, then it's going to be a market in balance again, waiting for more market-generated information. We'll see if we get more two-sided trade next week, two huge ranges. So maybe you have an inside week next week, which will still be a market waiting for more market-generated information. Then we'll see, is that enough rest period for the bulls? We come out of it to the upside and attack this? Or are the bears now going to take over and we come out of balance to the downside? All remains to be seen. This is how it plays out. Now, in the same in the daily, we got to the 200-day moving average yesterday and bounced off it pretty nicely, right? Got below it just barely, but it held. We closed near it, right? If the bears were that strong, after all the damage they did yesterday, if they were that strong, you would think they should be able to push, take out yesterday's low, and get below the 200-day moving average. If they cannot do that, then more and more I'm going to believe that maybe it was just all these week longs from the past 7-8 days that just got out. Good luck trading today. Have a great day. We'll recap the day and the week at 4 p.m.